everyone, Marli here to bring you another episode of Cheat Codes. Today we'll be talking about volatility and what it means in relation to the stock market. Volatility means how much a stock price changes around its mean or average price. Now, volatility is measured many different ways, including price models and standard deviation of return. Those might seem like daunting concepts, but they're actually pretty straightforward. The pricing model is basically a framework for determining pricing while taking things into consideration like the industry that they're in, where they land competitively, the type of customer they have, and the cost to run that particular business. The standard deviation of returns, on the other hand, basically looks at the average price and looks at how far away from that average number. The more volatile an investment asset is, the further away or higher standard deviation that particular asset is from its average price. So you're probably asking yourself, this is all great, but what does it actually mean? First off, great question. Secondly, it has to do with risk, and more specifically, how much risk you feel comfortable taking on. The more volatile an asset is, the riskier it becomes because it's then considered less predictable. When it comes to ETFs, mutual funds, and index funds, the three types of investments I talked about in a previous video, these investments are less volatile than individual stocks. Why? Well, because when it comes to funds, you can invest in a diversified group in a lot of different stocks, often in different industries. So if one stock or a whole industry plummets downward, your portfolio wouldn't decrease dramatically. With individual stocks or penny stocks, the volatility is typically higher. Now, that's not to say that they might not be a good investment, because much like volatility can trend downward, it can also trend upward. The old saying, with great risk comes great reward, might be true, but you have to be prepared for the opposite as well. In general, the golden rule of investing is to maximize profits while minimizing volatility. So it's always best to research before investing in any type of asset. That's it for this episode of Cheat Codes. Be sure to check back in as we'll have more releasing soon. Marli out.